Okay, welcome everybody to Wall Street Reporter's next super stock company spotlight. We are back with AIML, and for anybody that's brand new to a program, and of course, Tim Daniels, the chairman of AIML. Tim, welcome back.
Thanks, Jack. It's good to be back, as always.
Yeah, Tim, we got some incredible things to talk about. But first, for anybody that's brand new to our videos, our goal is to bring you those stocks which have that 10x to 100x upside potential. Companies going after massive multi-billion-dollar market opportunities that are at a key inflection point, and there are multiple catalysts in place right now, built-in catalysts in place right now that could ignite a massive increase in valuation. We've already had 9 of these stocks in the last few years that increased between 10x and 50x. We're looking for that next 10 bagger number 10. And I think today, Tim, I think we have a potentially AIML could be one of the could be very high on that great pantheon of multi-baggers. Incredible news we need to get into right now. So I'm gonna do first, Tim, just to give people a tease. I'm gonna do a little screen share, and I'm gonna explain why I have this on here. Okay. So, Tim, the wearables market in the U.S. This is according to Grandview Research. It's worth $21 billion, right?
Yes.
$21 billion. This is Grandview Research. It's growing 30% a year. Now, AIML right now, and I'm going to explain, for anybody watching this, I'm going to explain what this is about. But AIML is essentially like you're buying like a little Texas cattle ranch, for grazing land. You're buying it for a little money. And then you find out that you're sitting on an ocean of oil worth of billions of dollars. So you're getting the ranch, but really the value is this ocean of oil that's billions of dollars. And AIML is actually that little Texas ranch that's sitting on potentially a massive. I don't know if billions could be an exaggeration, but we're gonna get. I'm sure anybody who's watching is a little bit intrigued. So this wearables market is $21 billion according to Grandview. Now, here is where we get into the interesting part. February 1st, you were granted a patent, and nobody realized this because the stock didn't move. I mean, the stock today is you're trading at a $5 million valuation right now. $5 million. You were granted a patent February 1st, which is a massive game changer. Tim, can you describe this patent? Because this could be worth. You explain what this patent gives you first.
Sure. And I have to agree with you. This patent gives us tremendous validation and credibility in our technology, number one, and number two, opens the door to all sorts of revenue streams that that we could only hope for. If you've ever been involved with patents before, Jack, what patents attorneys always do at the start of the process is they'll ask for the moon and the sky and everything in between, knowing that the patent office will reject probably 95% of their claims, and they'll get the 1 or 2 claims that they were really hoping for. In our case, what we had basically asked for is the right to patent our technology as a wearable health monitor in conjunction with methods of analyzing biosignals coming off this for the purpose of monitoring health metrics for improving people's health. In other words, bottom line, it's wearing some sort of a wearable device like an Apple Watch, a Fitbit, a Samsung, and so on and so forth, for the purpose of having that device improve your state of health. Well, we were granted the patent on that.
A very broad patent. I mean, I'm sure anybody, and there's a press release which I shared on the screen for just a second, but it's a very broad patent. I mean, I'm just scrolling down the list. You got specifically the patent claims which are granted include machine learning to achieve health goals, behavioral analysis, cardiovascular monitoring, wearable electronic apparatus, predictive health analysis,
and 64 other claims that we had asked for within that patent. And so basically the bottom line is that what we had asked for, the patent office basically gave us, which is the protection on the use of a wearable device for the purpose of aggregating and monitoring and improving personal health. So what does that mean in terms of revenue potential? Well, first of all, let's maybe talk a bit about the wearable market, and I think you've got a screen share on that.
The screen is the screen went away, but yeah, it's
okay. All right.
21 billion.
Yeah, exactly. So fair enough. So anyway, you're looking at the U.S. wearable market being worth tens of billions of dollars today, and growing at a tremendous rate, and to be worth several multiples of that over the next few years. It's a large, robust, and growing market, and it includes all the big players: the Apples, Facebook, Fitbit, Garmin, Google, Microsoft, Samsung, Sony, right, and so on down the list. Well, basically, all those companies that have some sort of method to aggregate health data and convey that back to the wearer for the purpose of helping to improve that wearer's health is now infringing upon our patent. So all these companies are doing something that quite possibly are infraction.
This is the, as the kids call it, the mic drop moment.
Yeah, exactly.
This is it. Exactly. So basically, you have a 21 bill. I mean, it's multi-billions, right? 21, whatever the number, it doesn't even matter. It's a huge market. It's just going to be like exponential. But all these guys essentially right now are infringing on your patent, and what that means is you can collect a royalty. I mean, and it's the sky's the limit. But look, realistically, generally the way these things work is, you have you hire an IP law firm. They start sending it. First, they send a nice letter. They say you're infringing. Would you like the license, or we're going to sue you if you don't like? And then essentially people settle for a percentage of gross sales, cash, etc., etc. But generally, we're talking about 2%. Usually, 2% of gross is usually the typical license fee.
Certainly, in our experience, that's true. And our approach is that we would rather cooperate with these with various companies that might be infringing upon our patent.
Well, you're a Canadian company. The Canadians are polite people. You want to be nice, but carry a firm stick.
Yeah, exactly, right.
So essentially, you got this incredible. Now, just for context, essentially, if I did the math, and let me just pull up my notes here, because let me look at the math here. The market is 21 billion, let's call it, right? If you were to collect 2% gross, for patent licensing fee, IP licensing fee, that's about $50 million per year, pure profit, $50 million per year. And by the way, that number is growing.
Sure. Now, I wouldn't necessarily suggest that in every single company's case that they're infringing upon our patent, nor would I suggest that we'd be able to collect on every one of those companies. But I think the take-home lesson is that anybody out there, today or in the future, that wants to provide health metrics through a wearable device, best speak to us first, because we pretty much own the full spectrum of the rights when it comes to that's
okay. So Tim, this is I'm sorry to interrupt you. I know I get a lot of people complain that I interrupted too much. I'm the world's worst interviewer. I'm just excited about the story. I think we have right now a built-in 20x, maybe even a 50x upside from the stock right here. because you got the company right now is trading at a $5 million valuation, right? Now, I got to tell you, this patent is worth a lot more than $5 million.
I believe so. Yes.
Yeah, there's no question, right? So essentially, potentially you got 50 million a year in cash flow from IP licensing. I mean, you're not gonna. It may not be all 50. Maybe it's 10 million, whatever the number is, right? Sure. But that could be worth, let's call it 100 million today, based on net present value of future cash flows. 100 million today. Let's say it's only 50 million. Let's say it's only $50 million, which is like, that basically is right there a built-in 10x for the stock. Just that IP should be worth at least, I would say realistically $100 million. What people are going to realize that.
Yeah, we certainly believe we're worth a whole lot more. In part because of this patent, but also because of lots of other business.
Oh yeah. No, we're going to get into the details, because you're not just a patent company. You have a real business, a health.
No, just this patent alone, we believe, adds more value than our current market cap.
This is to me, Tim. This is like a dream situation. It's a no-brainer, because you're basically having. It's like if somebody buys. Again, we're not giving advice. I should run a little disclaimer at the bottom of the screen here. I'm going to put this because I don't want people to think that we're giving any kind of advice here. Let me just put this disclaimer at the bottom here. But yeah, so essentially, look, the reality is this. Anybody who's looking at the stock right now, you're essentially getting it's like you're getting a $100 bill for like $5. Essentially, that's what it is. Because you have this built-in IP position, which is, you're going to start at some point the what do they call it? What's the polite word? What do they call it? IP, not the enforcement. What do they call it? Is the monetization? Let's say monetization. Now, this is not just like a speculation, because here's the good news. And then after this, we'll get into the actual business, all the good stuff with Health Gauge and Tech to Heal. But the good news is this: is a couple of weeks ago, you actually one of the first people came to you. This is Medwatch, right?
Correct.
Voluntarily, they contact you voluntarily out of the blue and said, "Hey, we want a license." Tell us the details. Give us the details, Tim.
Sure. So Medwatch is a company based out of Las Vegas. They're privately held right now, and they're in the development stage of a wearable device very similar to this, that has the ability to monitor blood glucose levels in a non-invasive way. So where our device is able to monitor things like blood pressure and heart rate variability, body temperature, oxygen levels, and many other parameters. Their device is designed to monitor blood glucose levels for the diabetes market. The diabetes market is an incredibly huge market. It's about a $327 billion a year market in the US alone. About 1 out of every $4 spent in the US on healthcare is spent relating to diabetes. It's the third leading cause of death. And crucially, about 1 out of every 5 people with diabetes don't even know that they have diabetes, making blood glucose monitoring very, very important and valuable tool. So imagine for a diabetic today that has to do, the invasive and expensive and manual methods of testing their blood glucose. Imagine if you can just wear a device like this that's telling you, every minute or every 5 minutes or however often you need to, what your blood glucose levels are, and allowing you to micromanage your disease. Incredibly big market. So Medwatch is in the process of completing their prototype, and as part of that, they had their patent attorneys go to file patents on their technology, only to find that we already have patents covering that. So Medwatch did the responsible thing, and they came to us and said, this is what we're working on. We'd like to license your technology. And so we entered into an arrangement with them where for the term of the license, or sorry, for the term of the patent, and these are 20-year patents, they pay us $10,000 a month cash payment plus 2% gross sales royalty on products that they produce and sell in-house, plus an even bigger royalty for products that they're developing as a one-off third-party product for other companies, and other fees and services along the way, including a $2 million termination fee if they choose to back out of the agreement with us. So it's real money. It's substantial, and they did that.
It's validation. It's validation. This is not just. People should understand. This is not just like, you're not like some guy just making up a story about. This is a real company.
Yeah.
Voluntarily, their IP attorney, right? Their patent attorney.
Yeah.
Basically, this is not. You didn't have to call them; they called you.
Exactly. That's exactly what happened. They came to us saying, we'd like to use your technology and license it from you. We know that there are other companies out there that have been broaching this subject as well, and so we expect that there'll be a stream of these unsolicited offers from companies like Medwatch.
But to get like Apple, some of these other guys, you're gonna have to pick up the phone or your attorneys and say, "Hey, Tim Cook, give me my money."
Yeah. More than likely, in some cases, it'll be us, having to instigate, and in other cases, it'll be companies coming.
And I just want to also say is, look, I mean, just in case by the way, the patent litigation things are these are very expensive. These are very expensive things, but there's law firms who specialize in this, and they do this like on a contingency, like 20%, whatever it is, let's say even 30%, which is all well worth it because it's pure profit. So
in fact, that idea has already been floated to me. Someone has already approached me with that very scenario, that have a law firm take it on a contingency basis. And they go out and spend the money and do the work, take on all the cost and risk and time. And at the end of the day, if we're successful in defending our patent, which we believe more often than not we likely would be, they take their fee, and typically the fees will run 20 to 30% of.
So because again, this is this could be these to otherwise you'd be spending millions of dollars on litigation. This is much smaller. So that's I bring this up so that investors shouldn't think, oh, these guys won't have the money to go after Apple and Nike and Fitbit, whatever. No, you got pros who will do it, who know exactly.
Yeah, exactly. We want to deploy our resources, our financial.
And we're going to get
towards building the business, not
right. We're not. I mean, you're not in the business of being a patent, as I said, a patent troll. Although it's a great business model. I mean, we've seen public companies. I'm trying to think there's a couple of public companies out there that have, there were super huge runs. That's all basically they would do. They buy patents, and then they enforce the patents, etc.
Yeah, for sure. There's certainly companies out there that make more money, collecting royalties off their patents than they do off their business model. So there's money to be made for sure.
Yeah, I mean, listen. I mean, you guys did the work. I mean, your team, did the work in developing the technology. You should get rewarded for it. It's not like this is the way it is, right? So the main takeaway, I think, for investors to understand is that AIML is essentially in a position to be, the toll booth, the toll collector on this $21 billion highway. Anybody that wants to get on this $21 billion highway has got to, pay a little toll to AIML before they can, they can drive on. Otherwise, they're going to get the ticket in the mail, right? The big expensive ticket that comes in when you, drive past the toll booth without paying. And then your license gets suspended or whatever. I don't know what they do in Canada, but yeah. So anyway, but AIML, as we said, is a lot more than just the IP. Let's actually, for anybody that's brand new to the story, Tim, give us a snapshot of the core business. You got HealthGauge, you got Tech2Heal.
Yeah.
Tell us what you're doing.
Absolutely. So AIML is a public company traded in Canada and the US under the symbol in Canada, AIML, of course, in the US, AIMLF. AIML has invested in 2 health tech companies, one in Canada called HealthGauge, the other in France called Tech2Heal. HealthGauge is an end-to-end wearable solution that has 3 parts to it. This part, which is our proprietary wearable device, and this aggregates the data from my body, from the wearer's body, 24 hours a day, and it's aggregating things like your blood pressure, your heart rate variability, oxygen level, ECG, sleep patterns, exercise patterns, body temperature, and more. It's aggregating that, and then it's throwing it onto our proprietary app on the phone. That's a very important piece to the puzzle because the app on the phone is artificial intelligence driven. That makes the app that much more intuitive and accurate. And so while the device itself is really quite accurate, when you add in the artificial intelligence analysis, it takes the accuracy level of the results up to a higher notch. And the third and final piece, which is very, very important, which very few companies are out there can provide, including the Apples of the world, and that's our cloud-based platform where all this data that's being aggregated about me, about my health, 24 hours a day, is being thrown up into my personal platform on the cloud that not only I have access to, but my doctor, my nurses, therapists, pharmacists, family members, or whoever else I feel is important to bring into the loop with respect to my health biometrics, all have access to that web platform 24 hours a day globally to see how my health is today and compare those results to last week, last month, last year. And so it's aggregating my data real time over days, weeks, months, years. And so it's a complete end-to-end solution that allows the user immediate and actionable feedback that allows you to make health decisions that are going to improve your life. So that's what HealthGauge is all about.
So Tim, wait, Tim, let's. I want to ask you a couple of questions there, just because there's a lot. I mean, you're being very modest here about the opportunity of HealthGauge. So essentially, HealthGauge, okay, so your customers, the business model, the customers. Why does somebody want to get this device? Who gives it them? The doctor? Who's your customer? How do you make money with this?
Sure. So it's primarily a B2B model, although we have a consumer portal on the website as well, so that anybody can come in and purchase. But our primary model, our sweet spot is B2B, and that's dealing with hospital groups, ACOs, insurance companies, Fortune 500 companies, and so on and so forth. So any employer or insurer or health payer that is interested in improving the well-being of the people they serve is our customer base. For example, a good case model is a company that we've been working with that is in the transportation business. They run big rigs, big trucks all across North America 24/7. They've got thousands of rigs on the road. They need to understand on a 24/7 basis what's going on with the health of their drivers. Not only because it's in the best interest of their drivers, which is only good business
for massive liability. Exactly,
but also
you don't want a guy who's basically, he might, be, I don't know, like sleepy, whatever it is, or he's
or having, you know,
yeah,
a mild heart attack,
yeah,
or
and then he drives into a school bus. Yeah,
it's out of skew and so on. So yeah, so from an insurance standpoint, it can actually be a tremendous cost savings to the to the transportation company.
This is the big, and that's the big driver, because look, you put on this the health gauge watch on the guys on the wrist, right, every driver, and you bill them, I don't know, $20 a month, whatever the number is, right? But that saves them. The insurance company will lower their premiums by maybe a couple $100 a month, because that's now, is that, I mean, that's the real.
That's absolutely right. And in fact, there are insurance companies now that are being, very proactive, where, historically the idea of insurance was waiting till someone got, very sick and needed, urgent medical attention, and then they start paying out. And they find that that's a very expensive way to do business. And if they're even a little bit proactive by doing things like, encouraging their insured to get out and walk for a half hour a day, the mortality rates are dropping, the diabetes rates are dropping, heart disease is dropping, and so on and so forth. And so the cost to the health insurance company by paying for one of these devices is a tiny fraction of what they end up paying in terms of the medical
payout. Especially when you have groups. I mean, if they're insuring groups of people with issues like diabetes or whatever, different health conditions, it makes a lot of sense for them to give them this device that the doctors can monitor, all their vitals and everything 24/7, get alerted, if there's any kind of pattern. And again, we forgot to say, AIML stands for what? What does the AIML stand for?
So AI, artificial intelligence, ML, machine learning. And of course, artificial intelligence has become ever important part of the digital health tech industry, where we're finding machines are able to do things far faster, far cheaper.
You can detect patterns. I mean, you can it automatically, basically, your system can automatically detect patterns. Like, this is like based on whatever the data is coming in, they can say, okay, this is an indication of somebody might be on track to have a heart attack or some other health condition. And even a doctor can't. I mean, doctors aren't able to aggregate all this data, because you're collecting, millions of data points. With statistically, you could see, okay, this person their chance of let's call it a heart attack is increasing by 33%, because of this, and an alert goes out, and everything starts. So it's an incredible thing. It's very similar to for the insurance thing. I know, like there was an insurance. I think I got a quote from some insurance company. They said, okay, we're going to send you this device. You stick it in your car. We'll monitor how you're driving, whatever it is, and you're going to have a much cheaper rate, because we want to make sure that you're not braking too hard, or it monitors those things. And I was like, I'm not into it, but basically they have a whole model of doing that, and this is what you're able to do for people. For example, high risk groups, if they want insurance, right, and they can't get insurance, but if they put on this device, all of a sudden insurers will take them on.
Exactly. Yeah, there's many applications for this. For example, and this is something we've talked about on your program in the past year, and it was a study that was done that was funded by the Bill and Melinda Gates Foundation, and it was monitoring women who were pregnant women in a third world setting, who had very limited access to daily health care. But these were women who were at high risk for preeclampsia or high blood pressure, which is very serious problem, and often is deadly both to the unborn child and to the pregnant woman. And so what they were finding, so they used our device for the test. They strapped these on the wrists of the women in these remote villages where there weren't doctors and clinics and hospitals available to these women on a regular basis. And they were aggregating in all this data, and they found that beyond a doubt, this was able to help filter out those women who are at the high risk and get them to help far sooner than they otherwise would have. And so it proved that there are all sorts of business models that exist for a technology such as ours.
And of course, you have the patent position. So because, Tim, I mean, no offense, I'm sure there's people out there who are much smarter than the guys in your company who have great ideas of how to, and they have market, and they're going to say, but they need you, they need your IP, they need your patent to do this, right? There's guys who have all sorts of great ideas, so they're going to have to come to you. They're going to have to come to you, and this is what makes this, I believe, a 100 million plus valuation business, 20x upside from it, just on the IP, and of course, Health Gauge by itself. How big is the opportunity for your Health Gauge business?
I mean, the digital healthcare market, as it pertains to the monitoring side, which is the area that we're in with this particular product, is worth tens of millions today and growing, double digits.
Every in the early stages, also still
still in the early stages. Now, it was somewhat catalyzed. It was moved forward, I think, probably by a decade because of the pandemic. Because for the first time, people were understanding that their doctor down the street, the clinic that they're used to, getting in their car and driving to, isn't necessarily always going to be available to them in every situation. And the pandemic was a perfect example of that. A friend of mine who's a surgeon in the UK was telling me that through the pandemic, the incidence of amputations due to diabetes rose by 25% because people were not able to get in to see their doctor on a regular basis through the pandemic, and that led to circulation problems and eventually amputations. So people caught on to it, but so did the medical community, where they saw that this works. This idea of digital healthcare makes imminent sense. They don't need as many staff in their office. They need less square footage. They could see more patients in a day, and it's been added to the billing system. So the doctors, are getting paid for it now. So everybody sees that it makes sense. So the pandemic helped to push the usage of digital healthcare into into the mainstream, and it's not going away. It's going to be with us forever.
How much how does the model work? You sell a device, you get a monthly recurring fee. How does it work?
Sure. So on the B2B side, there's the two revenue streams. One is off the unit itself, and the second is a SaaS model or a subscription-based model to the corporations for each user that they've got on the site. Now, each contract with potential users is on a one-off negotiation, but generally our model is about $20 per month per user for the subscription basis, and the retail price on the wearable unit is $250.
Okay, so it's a very for insurance companies, for doctors, whatever, it's a very compelling. $20 is very affordable, and it gets them ahead of a major catastrophic insurance claim. I mean, they can either spend $250 a year, right, on the service, but that'll save them from having somebody end up in the emergency room, and it's going to cost them $500,000.
Mm-hmm. Yeah, absolutely. Absolutely right. Absolutely right. And in fact, the reality is that the models that I've seen so far with insurance companies with respect to wearables like ours is actually a no cost, no risk model for the insurance companies. Why? Because what they're telling you as the insured is you go out and buy one of these on your dime, And if over the course of let's say a year, might be 6 months, depends on the insurer, if you reach certain health goals that are monitored by this
Oh,
wearable,
right, right, right.
then the insurance company will reimburse you for the cost of that. So they
Okay.
don't pay for it up front. They'll have the user pay for it up front. The user is then motivated to at the end of this period, not only get a free watch out of it, but to improve their health. And of course, the ultimate
More
motivation by
premium.
the insurance company is that they're improving the health of the insured, and therefore the cost payout at the end of the day drops substantially. So
There's,
it's a win-win model for everyone.
Tim, the situation you're in kind of right now is you have this incredible technology, right? You have a business model, right? We're talking about right now, and again, you're still in the early stages, but it's almost like, you know what? The thing you have is this: the IP, the technology you have, the position, the licensing position is so great. It really doesn't matter. I mean, like the business model will take care of itself, and the revenues, because it's very similar to Google or Facebook in the early days.
Yeah.
Before Facebook had massive revenues, the company was worth billions because the technology and the position was, everybody realized what it was. And also Google, before they even had the ad revenues, it was worth, because people realized. And the same thing is with AIML. You're in that kind of position where the model and the revenues, it'll take care of itself. Whether it happens this month or 6 months from now, it doesn't really matter, because intrinsically the business is worth, potentially right now, we just went through the numbers, we could be sitting on 100 million right now, just as of today, which is in a horrible market environment. The markets are crashing, and still this could be worth 100 million.
No,
So,
I absolutely agree with you, Jack. And I think that beyond a doubt, we're in the right space at the right time, and we've got the right technology, the right team put together, and we're building the business model around that, much in the same way. You used a good analogy. Google, they built their search engine, and everybody said, okay, great search engine. How are you going to make money? Are you going to make money? Well, look at where they are today. They made money. Another great example is Amazon, where Jeff Bezos started out only selling books, and every book that went out the door was sold at a loss. And so what kind of a business model was that? But he understood that if you reach that tipping point in terms of number of users coming, he would be able to expand that model beyond the book selling. Look where Amazon and Jeff Bezos are today. We believe I'm not suggesting we're a Google or an Amazon, but the same sort of mentality applies, where we know we're in the right space at the right time, and we're building the fundamentals of our technology, and we're building the business model around that. And it will be a dynamic, fluid process, but we are starting to see the first fruits of that paying off. And I think investors who take the chance on us here and now, and it's not a huge chance. Like we said, it's $5 million market cap, and are patient. We believe are going to be well rewarded along the way.
yeah, no, this is no, it's an incredible position. So essentially, what kind of traction do you have, though? Because realistically, I think the company right now should be valued based on the IP, which again we talk about is the patent position, which is $100 million plus potentially. But in terms of Health Gauge, that business alone, what kind of traction do you have in the market so far in terms of signing up these B2B accounts? What's going on there?
So the first 12 months of our existence was getting the technology up and running, getting websites going, getting listed on various exchanges, hiring the right people, getting patent work done, and so on and so forth. And so it was a real building year for us. At the same time, we opened the door to a lot of different potential strategic partners, and started that whole workflow. And it's not a short and easy workflow, because we're dealing with some large corporations that historically aren't in the technology space, and so this is something that they have to get their head around and understand the dynamics and the value proposition for them. But we've been, in that building process with them now, in many cases for, the better part of a year. And we believe that this year we will start to see the first of those, significant strategic partnerships start to shine through and show up on our balance sheet for us.
Okay.
So we're pleased with how everything is moving forward.
Yeah. No. So it's yeah. I mean, like it's interesting. Before this patent came along, I would have thought, okay, what the main thing to focus on is traction in terms of the snowball of the revenues coming in, getting signing contracts, etc. At this point, you know what? I don't really care about, I mean, I'm sure you're going to get them, whatever. It's great. I'm sure you're going to get business, but I think that for me, the story is this patent position, which is, I'm looking at this as 100 million plus opportunity. So that's, to me, that's the 20x. But hey, I hope we get HealthGauge. You sign up all the insurance companies. We get all the things going and all that. Which I'm sure. Look, you have a whole team of people who are 24/7. Well, not 24/7, but they're working hard. Yeah, you have Randy, the CEO, is a very smart guy. He's the CEO of HealthGauge. What's actually his background? He's what is it? He's got a very serious AI background.
Yeah, he is an electrical engineer by education. He's been involved with the artificial intelligence world, since the inception of artificial intelligence, and he worked for the last decade for TELUS Health, which is Canada's largest digital health tech company. And so, in that position, as a part of senior management there, he was able to develop, a real Rolodex, and I know that's kind of a dated term, isn't it, a Rolodex? But he knows everybody who's anybody in the health tech industry, not only in Canada, but across North America. And that's allowed HealthGauge to get into a lot of doors that other small companies, the size of HealthGauge, normally wouldn't be able to get inside of, because of his background with TELUS Health. So Randy is a very sharp guy and knows his business very, very well. His founding partner, a fellow by the name of Bruce, also an electrical engineer, and Bruce Medwatch also has spent his entire career in the artificial intelligence space and has developed several different artificial intelligence technologies that he's licensed out to other companies, not in the health tech space, but for other purposes. So he knows artificial intelligence probably as well as anybody walking the streets today. So really strong team when it comes to health tech and artificial intelligence.
I mean, your position as the chairman really is like you're the capital markets guy, kind of the quarterback. And I mean, we should also explain that really the overall goal here with AIML is I mean, you're kind of almost like a holding company for different health tech related technologies. I mean, because you made the investment in Tech2Heal. I think you're looking at other deals, potentially acquisitions. I mean, not today with 5 million market cap, but down the road, I mean, is finding some of these really compelling technologies. But let's go into Tech2Heal, because that's an interesting. Tell us about what's going on over there, and what is that? What for anybody that's new? Again, what does that company do? And
okay. So Tech2Heal is in the digital healthcare space as it pertains to mental health. And as a result of the coronavirus pandemic, we've seen a new pandemic emerge globally, and that's a mental health pandemic. And survey after survey is showing that the mental well-being of workers globally has deteriorated substantially in the opinion of those workers, and throughout the general population. The incidence of everything from suicide to alcoholism to spousal abuse, to drug abuse, all skyrocketed, through the pandemic, and many of those have stayed high well after the fact. And so we've seen that is a real and growing problem. And like other areas in the healthcare world, in the mental health arena, the old brick and mortar model just doesn't hold up anymore. It just doesn't go far enough, and doesn't meet the needs. And so in comes companies like Tech to Heal that has developed proprietary apps and platforms designed to provide both mental wellness right up through to medical therapy with licensed psychiatrists. The nice thing about the space they're in, which is in Europe and based in France, is that mental health has now become part of the billing system throughout the European Union. And so companies like Tech to Heal can now provide their services and it be billed through to the government.
I think it's a couple €1,000 per year, right, or something?
Yeah, exactly. And yeah, the numbers aren't insignificant when you start talking about applying it over thousands of patients through an organization.
And you have it's the same B2B system where you're going to large organizations that may have 10,000, 50,000 employees.
That's
and you
right.
give them this, all of a sudden, that's worth, it could be 5 million, 10 million a year.
Exactly.
Per company.
Exactly. Yeah, that's right. So their business model is B2B, and they've managed at this point to sign the first couple of contracts, one with a major French-based but internationally located manufacturing firm with, I think, 150,000 employees, if I remember.
150,000 employees. That's a lot of people.
Yeah, and operating in dozens of countries globally and so on. So very large corporation, and mental health is a huge issue for them. Yeah. And so they wanted to enlist the services of Tech to Heal.
Okay, so that's a big deal. I mean, this is it's a massive validation. When you have a major, world-class company, 150,000 employees, signing up for the service.
Yeah,
that's an indication where things can go.
Absolutely, absolutely. And they are in the process of, I hopefully, fingers crossed, some significant new strategic partnerships that I know they've been working on for a while, and hopefully over the next short while we'll have come through to fruition, so that they'll be able to announce some additional deals.
So you have basically, so to sum up, AIML, right, is essentially you're essentially a health tech holding company. You have two early stage companies with some really compelling market opportunities. They're starting to get traction, some early traction, some proof of validation in the market. Yeah. But the overriding thing, the big thing is, of course, that IP position. I mean, again, I keep going back to that. To me, that's the built-in 10x. And you have these two other deals. You have other things that you're probably going to be picking up, once the stock gets moving at some point. So it's very, very exciting times. Tim, let's kind of wrap up here. We're in early May. The summer is usually considered a slow time, but I don't think it will be this year. What kind of news flow can investors expect to see from AIML? What kind of milestones coming up do you have? Next 60 days, 30 days, 60 days.
Sure. So I do believe we're going to see some news both on the HealthGauge and Tech to Heal front. Both have been diligently working towards some additional strategic partnerships, similar to what we've announced in the past. And I think that I know that some of those are getting very, very close. And so I'm expecting to hear from both these companies that that they've got some significant new partnerships that they'll be able to unveil to the marketplaces. And as well, we are working towards some other acquisitions that could add some tremendous value to the company. And yeah, we'd like to see better market cap on us. But it's a bit of a tightrope walk as well, because we don't want to miss these opportunities, and so we want to do it at a time and in a fashion that's as least dilutive to us as possible on one hand, but on the other hand, I don't want to miss the opportunity. So there's some work in progress with respect to that. So stay tuned, but there's some exciting things on the horizon for sure.
Okay, excellent. Tim, on that note, I want to thank you. And again, thank you for sharing this incredible news with the patent position, all this great stuff. And look, we're going to catch up with you the next couple of weeks as hopefully we get some new contract news to talk about at the Health Gauge or Tech to Heal, etc. And we'll see you then. Tim, thank you again.
Thanks, Jack. Always a pleasure.